One of the most dramatic shifts in the cryptocurrency market in over a year has just occurred, yet this might be the most crucial stage before the next tremendous surge. The data is looking quite nasty across the board, and that's just 48 hours after that huge fall. Some cryptocurrencies, including prominent names like XRP and XLM, fell more than 12% on the day, while Ethereum fell by double digits and Bitcoin fell by more than 7%. It appears disastrous at first glance. The stock market is in a tailspin, people are very emotional, and everyone is on social media freaking out. That being said, the majority of individuals will overlook this. At certain junctures, the market unwittingly positions its most lucrative winners. Your money is not being advised by this. When the top coins experience losses of 20, 30, or even 40% in less than a week, it's clear that wealth is being transferred, not just fear. While the astute capital stealthily places itself, the impatient are selling off their holdings. Furthermore, this level of volatility may indicate the completion of the corrective phase rather than the start of a bear market if one is adept at accurately interpreting this situation. We'll explain it in full later on, but first, if you want to be sure you're making the most of XRP's future, read the XRP Millionaire Blueprint. It's an in-depth analysis that includes a polished essay, images, and video instruction demonstrating the methodology I used to detect similar setups before to their explosion. The information is neatly arranged and can be easily followed in the remark that is pinned below the video. All right, let's go into the meat of the matter at hand. Almost every major coin was heavily damaged by this sell-off, according to the daily market view. After reaching a high of about $259 earlier that day, XRP hit lows of $152, while Bitcoin fell to approximately $1,460. Ethereum also fell below $3,250. That's a decrease of more than 40% from one wick to another in just one day. While these are not minor changes, they are also not unusual in the cryptocurrency market. Almost every momentous rally that has ever taken place began with a shakeout of this kind. In just a few short weeks in 2020, during the COVID meltdown, the whole cryptocurrency market lost almost 65% of its value. By the time we reach the present, the market value has plummeted by almost $1 trillion, or about 24% from its peak. When you step back, it doesn't sound that bad. As far as the market's overall trajectory is concerned, this type of correction is really beneficial. It's like starting over, you get your leverage back, your weak hands get cleared, and you get the momentum back for your next move. A similar tale is told by the whole altcoin market, also called Total 3. Altcoins had one of the greatest declines in recent history, with a 46% drop on a single weekly candle. Something jumps out, though, when you compare this graphic with ones from earlier cycles. Months of steady accumulation have preceded enormous expansion every time we've experienced a shift this sharp. Presently, the candlestick has precisely retraced into demand zones that extend back to the beginning of 2024. What a market does just before relaunching is a textbook retest of past structure, so that's the technical side of things. Finally, we get at the RSI. Currently, the RSI levels for Bitcoin, Ethereum, and XRP on both the daily and weekly charts are close to what we observed during the bottoms of April and June, which is a sign of momentum. In the past few years, every time the RSI dropped to this level, it signaled a major turning point. Even though momentum is exhibiting symptoms of tiredness on the downside, we may still witness some sideways chop through the weekend, and possibly a slight dip before the weekly close. As soon as that occurs, purchasers will inevitably return. And now we may go on to a topic that the majority of people ignore: how this sale is structured. Neither a sluggish bleed nor a retail panic characterize this. A liquidation event occurred here. Within hours, leveraged positions worth over $16 billion were completely wiped out. That set off a domino effect that resulted in billions of dollars worth of forced sell orders worldwide. Because a single, unanticipated cascade may wipe out a whole portfolio in an instant, seasoned investors always caution against using excessive leverage in crypto. Our recent observation was not organic selling, but rather a liquidation reset. Also, we know from past experience that the worst of it usually goes away really fast when that occurs. The wicking down to 1.52 for XRP was an attempt to grab liquidity. After the market filled deep orders and swept stop losses, it promptly rebounded above the crucial support level near 170. Such a move does not indicate weakness. Rather, it is a masterful manipulation of the market that frequently indicates the formation of a local bottom. Every significant run in XRP's price, according to the data, started with a similar violent jump. Before an unexpected vertical move, there is a big shakeout to clear the board, then some calm buildup. The scenario is aligning itself in an unsettling way, even when considering the larger macro picture. According to remarks made by Fundstrat analyst Tom Lee on CNBC, the volatility index VIX rise was among the biggest in recent memory, placing it in the top 1% of all spikes in history. Just put, it means that people are starting to freak out. Forward returns are often at their peak when anxiety levels are quite high. The market usually rebounds a week or two following a rise in volatility like this. The current crypto charts are revealing that to be exactly true. Liquidity dried up, fear levels soared, and prices fell every time the same mental loop plays out. When prices drop, retail investors sell out in a hurry. A few weeks after selling, the identical individuals start chasing green candles again as institutions stockpile amid dominating anxiety in the press. Emotions always triumph over reasoning in the short run, even though it's the oldest narrative in the market. This is where having a level head and patience come in handy. The present decline is merely a prelude to the cycle's eventual climax. Is the market about to enter a bearish phase? If you fail to see this opportunity before the next influx of funds, you will miss out on a great chance. Keep in mind that the basics remain the same. Projects like Ripple, which have relationships that traditional banking cannot ignore, are still moving forward at full speed, and institutional adoption is continuing. Regulators are also getting their regulations better. Furthermore, as is common during market resets, Bitcoin's dominance has been increasing during this decline. Once that settles down, investors' money usually goes back into other cryptocurrencies, and XRP has a history of being one of the assets that shines during that time. Once again, the technical indicators are converging, and the pattern and mood are both present. Thus, this very second may be a crucial window preceding the next run, because once the recovery begins, it will happen more quickly than anybody anticipates. That's the one thing that retail never expects. There is no second opportunity to purchase at the same levels during the turnaround. Once XRP rebounds above $3 and Bitcoin races back near $120,000, the same investors who are freaking out now will be kicking themselves for not buying the drop. We haven't arrived yet, but we are already laying the framework. The broader view becomes glaringly obvious as we remove ourselves from the distractions and zoom out. All of this is part of a bigger macro cycle that has been developing subtly over the past few months. There has usually been a sharp corrective period immediately preceding a new crypto bull run. This is the market's normal procedure for restoring confidence and liquidity before the next big upswing. Since Bitcoin is still the center of the crypto universe, let's examine it first. The long-term structure of Bitcoin remains very sturdy, notwithstanding the fears. The recent decline towards $104,600 has not affected the macro higher lows. We haven't even gone close to re-entering the $98,000 level, which established the previous low in April. The structural upswing of Bitcoin has not been interrupted, even though the short-term volatility is terrible. The weekly RSI is getting close to the area where previous market bottoms were. It was a perfect storm for a liquidation washout prior to the next rise, especially when coupled with the stretched funding rates that preceded this catastrophe. This very second is fascinating because of this. Bitcoin is always at the forefront of a crypto bull market's comeback, but the real moneymaker is always the diversification into altcoins. After a shakeout like this one, Bitcoin usually stabilizes and consolidates, and then that rotation happens. In 2017, alts didn't begin to explode until approximately 6 weeks following the March catastrophe. It just took 3 in 2021. The time between now and the end of November may be the last chance for accumulation before the altcoin market starts up again if trends continue as expected. Projects like XRP excel in this particular area. After Bitcoin's volatility subsides and capital moves into assets with strong utility narratives, XRP has historically experienced its biggest runs. And at the moment, there aren't many stories in this arena that can compete with the one developing around tokenization and cross-border settlement, two areas in which Ripple is firmly entrenched. Sure, let's take a moment to discuss it. For Ripple, the institutional side has had a tremendous few months. Continual growth into Middle Eastern alliances, trial programs with central banks, and the tokenization of actual assets. Nothing changes there, no matter how the market reacts in the near term. Cost is an effect rather than a cause. The current price of XRP does not represent its actual worth. Leverage unwinding causes a temporary liquidity event. On the other hand, the basics have never appeared more solid. Now let's move on to the present day. The structure of XRP on the macro chart remains quite encouraging. Despite the steep wick down to 1.52, no important long-term support zones were broken. A multi-year trend line that began to take shape in the latter half of 2022 is continuing to do so. This exact arrangement has happened to us before. A lengthy period of low volume, a deep liquidity wick, months of consolidation, and then a dramatic spike when volume is back. If we take a more technical look, we can see that XRP's Relative Strength Index, RSI, on the weekly time frame is back around oversold levels, which has happened 3 times in the 3 years prior. Every time, within 2 or 3 months, a significant reversal followed. In addition, the weekly MACD is showing signs of flattening, suggesting that buyers may soon regain momentum. No, these are signs for the long haul. Indicators like these influence the subsequent stage of the cycle. However, the congruence between the technical framework and the macro narrative amplifies the effectiveness of this approach. The shift from conventional correspondent banking to immediate digital settlement is causing a monumental upheaval in the world's financial system. Old, sluggish, and pricey is Swift's system. That problem is addressed by Ripple's XRP-based on-demand liquidity model. The settlement time is shortened from days to seconds, and expenditures are decreased by up to 90%. The time is perfect, as governments, banks, and other financial organizations are publicly investigating blockchain-based settlement methods. Thus, individuals fail to see the big picture when they get alarmed at XRP's 12% daily decline. This spans more than a week or even a single day. What follows is a discussion of the blueprints for the currency of the future. One of the few assets tied to that change is XRP. The remainder of the market, however, is undergoing what seems like the same old reset phase. Ethereum's decline below $3,250 may appear unsettling, but retesting levels have often served as launchpads in the past. The so-called Total 2 chart, which shows the entire cryptocurrency market excluding Bitcoin, has returned to its prior breakout range. Prior to each expansion, that range attracts liquidity on a periodic basis. The rate of sentiment change is one of the most important metrics I've been tracking. There was market euphoria only 2 weeks ago. Meme coins were flying in the air, and leverage was at an all-time high. People were talking about new all-time highs. Those same individuals are now of the opinion that the market's bull run has ended. Reversals always follow such a dramatic change in opinion. Fear is the key to success in the market. Let's use data to put this in context. There has been at least one significant correction of 30% or more before each crypto cycle since 2015 has continued higher. Actually, 5 distinct corrections over 35% occurred in 2017. Despite this, Bitcoin's value increased by more than 1,400% by year's end. Although painful, these setbacks are inevitable. The majority of individuals quit during these. That is also why the subsequent parabolic phase eludes them. What is occurring in conventional markets is another significant indicator. With a 29% intraday surge in the VIX, the S&P 500 had its largest volatility spike in over 6 months. Local bottoms, not peaks, have historically occurred at the same time as those occurrences. According to Tom Lee, these increases are usually just nice flushes, brief periods when the market gets rid of leverage and panic before continuing its trend. Assuming that is correct and the stock market finds stability in the coming week or two, cryptocurrency is expected to surge in tandem with it. Keep in mind that crypto's link to macro mood is strong, but its volatility is stronger. Cryptocurrency often takes the lead in price increases when risk-on assets bounce back. That's why it's so important to be patient at the moment. Even while everyone wants it, the markets won't offer you fast confirmation. Uncertainty is a constant during the rehabilitation phase. The same sentiment prevailed during the last major decline in April. The final chapter has been written. However, the overall market capitalization increased by more than $800 billion in just 45 days. Opinions in this field can change that quickly. Now let's take a look at the bigger picture of adoption trends. Institutional custodians are adding XRP to their portfolios alongside Bitcoin and Ethereum. Ripple's ODL usage is on the rise, and the amount of global payments processed on blockchain rails is only going up. Even if there is short-term volatility, these developments will continue. If anything, they pick up speed when market resets allow major players to buy at lower prices. A convergence of liquidity, regulation, and technology is something we're keeping an eye on in the long run. With trillions of dollars worth of real-world assets predicted to move to blockchain in the next few years, the demand for quick and efficient settlement tokens is only going to grow as tokenization takes momentum again. That lane is occupied by XRP. The rails of XRP can be simply integrated into the same infrastructure that is being developed for digital currencies issued by central banks. For that reason, however, how excruciating the present correction appears, it may actually be laying the groundwork for a far larger event than merely another bull market rally. It's about setting up the digital assets with real use to rule the market in the future. When liquidity comes back into the market, which it inevitably will, the market often goes into a tailspin. The market will most likely experience a rapid rebound as Bitcoin regains lost ground, cash flows into large-cap altcoins like XRP, and then, when risk appetite returns, into smaller ventures. That is why maintaining an overarching perspective is crucial. Put aside the daily news proclaiming crypto's demise and tune out the noise. They say the same thing every cycle, and we've heard it all before. After a period of consolidation, the market is able to shake out weak hands and resume its upward trajectory. If you're looking at the big picture, this time of uncertainty, with all its red candles and general sense of panic, is actually where the opportunities are hiding. Because when looking back, these are the weeks that everyone believes were the lowest. Going even farther ahead, it's crucial to stop focusing on the short-term fluctuations and start tracking the long-term movement of the cryptocurrency market and XRP in particular. True crypto wealth is built by focusing on structural patterns and long-term adoption, not on daily swings and liquidation events. History shows that. It is easy to see the repetitive pattern at a distance. The purpose of any significant downturn is to clear the decks for the next round of development by eliminating weak hands and making good accumulation chances available. This expansion is still firmly supported by Bitcoin, the foundation of the crypto ecosystem. Despite a recent decline to $104,600, Bitcoin has maintained its macro support layers. Although we have encountered severe short-term pressure, the long-term uptrend remains unbroken, as the rising channel defined by the trend lines since late 2022 persists. Altcoins usually experience waves of rapid growth once the macro recovery starts when Bitcoin maintains these multi-year trend lines. We observed precisely the same thing in earlier cycles. Following significant market shakeouts, investors shift their focus from Bitcoin to high-quality altcoins such as XRP, which drives some of the market's most impressive gains. Particularly for the next expansion phase, XRP is in a unique position. Fundamentals and real-world adoption are more important than price charts. Under the radar, Ripple is discreetly preparing for big gains in the next 12 to 36 months through its continuing institutional alliances, integrations with cross-border settlements, and trial projects with central banks. There's a clear correlation between XRP's utility and its adoption trend, setting it apart from speculative tokens. That gives you a leg up in a market where a lot of assets are still based on speculation. A pattern becomes apparent when we examine the historical cycles of XRP. The current decline to 1.52 is typical of the lengthy consolidation periods that typically follow major liquidity wicks, which gather buyers at lower levels. In the past, XRP has launched into multi-month rallies after these consolidation phases, which have significantly surpassed the previous highs. Price changes like these aren't arbitrary. These results are expected as a result of the market structure and the growing real-world use of XRP. Total market cap for all cryptocurrencies is still inside a structurally bullish area when we look at the market as a whole. Following the $1 trillion wipeout, support zones that extend all the way back to early 2024 will still be there. Important institutional and long-term accumulation locations are located in these zones. Therefore, this is quite important. The market needs to consolidate here so the parabolic advance may happen. What this means is that everything is already in place. Now all we need is for sentiment to level off and for money to start flowing back into riskier assets. It is impossible to exaggerate the psychological impact of these adjustments. At this very moment, headlines and online mood are dominated by fear. The emotional cycle reaches extremes as retail traders panic, leading to the liquidation of leverage. Highest opportunity has always occurred at the same time as highest fear. There has always been a period of extreme volatility, sharp price declines, and general skepticism at the beginning of each crypto bull market. For those who can see the big picture, these are the best times to accumulate. Even while the market's short-term behavior might be somewhat stressful, the signs for the long term are still very good. Financial institutions are increasingly adopting Ripple. The network's value is growing, and regulatory clarity is rising on a global scale. As more and more established financial systems face inefficiencies, XRP's function as a bridge asset becomes more important. There is a unique alignment that can generate significant long-term advantages when technical, structural, and fundamental elements come together. Take a step back and look at the bigger picture. Major shifts are occurring in the world's monetary systems. Digital currencies are being investigated by central banks, international payments are being watched, and solutions that prioritize efficiency are highly sought after. All of these problems are solved by Ripple's XRP-based on-demand liquidity model, which drastically cuts costs and shortens transaction times from days to seconds. These solutions are seeing a steepening of the adoption curve, which will have massive effects on XRP in the long run. To further our understanding of what may happen next, we might also examine historical parallels. Just like XRP did during the 2017 to 2018 cycle, after steep drops, there were consolidation phases. Following some flattening out, the token went on a multi-month surge that yielded enormous profits. In 2020 and 2021, we saw the same trends. Although there is no certainty that future results will be the same, There is a probability framework that may be used to predict future moves based on structural parallels in adoption, market cycles, and technical setups. Chasing short-term pumps or attempting to forecast daily highs and lows are not the points here. To succeed in crypto over the long run, you need to find assets that actually have some use, figure out how many people will buy them, and then strategically buy during times of market turbulence. Each of these criteria is satisfied by XRP. One of the most alluring accumulation opportunities in recent memory has opened up as a result of the recent fall, which has shook out leverage and cleaned up the market structure. Those that are patient and plan ahead now may be in a prime position to profit handsomely in the next cycles. One important factor to keep an eye on in cryptocurrency markets is liquidity rotation. When Bitcoin's price has leveled off after a correction, investors often put their money into altcoins that are considered high quality and have solid fundamentals, widespread usage, and favorable technical setups. One of the initial big winners of this rotation is XRP every time. With its well-established market structure, increasing interest from institutions, and growing practical utility, it is well positioned for a new surge in popularity. With confidence from investors and a number of relevant use cases, XRP is well positioned to lead the market into the next bull phase, suggesting further gains in value as investors move their money away from Bitcoin and into alternative assets. Consideration of the regulatory landscape is equally important for long-term investment. Institutional capital faces fewer obstacles with more transparency and widespread adoption. When it comes to collaborating with authorities and developing solutions that meet regulatory requirements, Ripple has been ahead of the curve. That gives XRP a jump up on its competitors, many of whom are still dealing with questions of legality and potential use cases. In the long run, regulatory alignment and acceptance might greatly enhance growth potential when the market as a whole starts to rise again. Therefore, although the current crash seemed disastrous at the time, a different tale emerges when we step back. After the correction, leverage was removed, weak hands were removed, and the stage was set for a disciplined accumulation period. A large opportunity appears on the horizon for the long run, according to technical indicators, adoption measures, and macro trends. In this setting, a little forethought can pay off handsomely over the course of months, if not years. Knowing the storyline from the beginning is essential for those who want to be ready for the next big crypto cycle. This necessitates an understanding of the market dynamics, the adoption narrative, and the structural structure of XRP and similar assets. The next stage of expansion may come more quickly than expected now that the framework is in place, but only if the right people are willing to be smart and patient. The XRP Millionaire Blueprint is a comprehensive strategy for making the most of opportunities like these. Included in the comprehensive guide is a professional text, infographics, and a video that shows you exactly what to do to position yourself for the most possible gain. Everything is organized in a way that makes it easy to understand and do. Below the video in the pinned comment, you may find it.